Crypto dreams a brand new range. The future's here, no time to wait. Freedom's calling, let's create. Turning power to the people's hand. Together we'll reclaim this land. Join the
Hello everyone.
take a stand for a brighter tomorrow. Everybody joins the crypto world.
How are you doing today? Let me know in the comments. It's a start into a new week, and we all know what that means. Some of us enjoy it, some of us dread it. Hopefully you are part of those who enjoy it. We're gonna get started here in just a moment. Please leave me a comment in the chat so I know that you're here. Always love seeing you with me. Andrea's doing great. Awesome. Feeling very blessed, Clamser. That's true, we are indeed blessed. If we are here watching the stream or being on the stream, then we are blessed. All right, we're gonna get started here in just a moment. Okay, nice. It is Monday, June 16th, and today's stream is not just about profits. It's about protection. Because as much as I love DeFi, and yes, I do cash flow from it. I cash flow from DeFi. There's a darker side that most won't tell you about. But you will learn about it today. By the way, just letting you know, in case you want to know how exactly I cash flow and navigate and all of that, I have my landing page here, crypto.lifestyle, which gives you access to all of the details. So DeFi comes in degrees. Not all DeFi is created equal. You've got your high-risk casino plays and also rock-solid protocols. But the problem is, most people don't know how to tell them apart. Today we'll break it down. There's human risk, who is actually behind the platform. There is platform risk. Can this technology be hacked or rugged, as we say in this space? And then there's the market risk. How does volatility hit the protocol? And then also a big one that I have had to come and face several times, and that is the partnership risk. When the platform that you're trying to leverage has partnerships, and of course, the more partnerships there are, the more levels of danger there are. And I'll also share a true story today about a project that was truly killing it. Great DeFi mechanics, a really solid real-world partner that they had. Everyone was touting that real-world partnership. And then it appears that the partner disappeared, just vanished, left the community, the money, and the dreams all gone. Now, the guy who promoted it, he actually had a live stream 2 days ago. The stream is not available anymore. I guess he decided to take it down. But while he was live, he actually broke down crying. So I have a snapshot of that for you. So here was a screenshot of that live. So a grown man in the top left corner, wrecked by trust. This is the side of DeFi that nobody tells you, right? And let me be very, very clear. I'm not trying to cast a negative light on, or even a positive light on, any of the individuals shown. I just want to show you that this person, you can see it in his face, right? In the top left. You can see the desperation. You can see the anger. And in case you did watch this particular live stream, you would have heard a lot of fuck yous, a lot of anger coming out, a lot of tears. The gentleman sharing with the world that he himself got fucked in this situation. He had his own money in there, his wives, his children, his families. So the purpose of today's stream really is to educate you about what DeFi is, but also how you can avoid it, because you don't want to be in the situation that this gentleman was, because it's really heartbreaking. I myself am finding myself with losses because I was an investor in this project. But to be honest, at this point, I feel very sad about the individual because I know exactly what he was doing. He was responsible for the marketing part. He was responsible for the brand. And that is something a lot of us content creators and business owners, we like to do that, right? We like to make sure that the world knows about what we have to offer, and we like to make sure that there is a larger adoption to the projects we believe in. Just like I 100% want you to go to crypto.lifestyle, which is my landing page, and I want you to learn in a 4-part free series how I approach it, how I cash flow. Because there's ways how you can do this reasonably, and then there's ways where you can do it recklessly. What is good about me is that I speak from experience. I walk my talk. I truly live the crypto lifestyle. I think you understand. So don't forget, for those of you who are curious and you have questions, please put them in the comments. I'm really, really willing to answer to the degree that I can and that I know. I've seen in the past that you guys really enjoy when I have a slideshow prepared and I go through everything, and I'll do so today as well. The title of my presentation, if you will, is Understanding the DeFi Risks and giving you a balanced perspective. So if questions arise on the way, please let me know. Now, let me preface this again. The purpose of this live stream is definitely not to scare you away from DeFi. As a matter of fact, I love DeFi. The purpose is that you are educated and that you know what the risks are, and that you get somewhat of a toolkit also to assess the risks. Should you be confronted with a DeFi project, and it's always very tempting because the gains are usually very juicy, and you need to decide for yourself, are you going to go in this or not? So if that is fine with you, give me a yes in the comments. Give me a yes in the comments. And don't forget to like, share. This one is important to share, guys. And also subscribe. Let me play my little intro video here. and then we will get started. Okay, here's a slideshow. Now, don't forget, this is very, very important. Nothing you see here is financial advice. Okay, there is no financial advice given here. No financial advice. Okay, so understanding the DeFi risks. Let me see if we can go through this. Okay, first of all, what is DeFi? It is short for decentralized finance. And yeah, as you can see, we call them financial applications without middleman, which is incredibly powerful. Imagine you can be a borrower or a lender or any other financial transaction that you would typically either have a license for, or you would have to have some kind of bank with an accredited relationship. All of that can be done in decentralized finance. And the most beautiful thing is that it can be done without the middleman, because middlemen are always a problem. Middlemen often are gatekeepers, and more importantly, middlemen require a cut of the deal, right? So they often collect fees, which makes everything a little bit more expensive. Let me give you a very simple example. If you pay a merchant these days, their middleman is the credit card processor, and they charge the merchant, give or take 2 or 3%. And that's why you will often hear, if you use your credit card or your debit card, they will add that to your check, right? So in the idea of decentralization and crypto, the middleman is not there. You send your money straight from one person to another, and nobody collects fees. So if you think about that, applying that to business applications and financial applications, there are a lot of fees that don't occur, which is why DeFi is so powerful. It is also extremely powerful, and I won't go into all the technicalities of that, but it's extremely powerful because the data of the financial application is hosted on the blockchain, which you just think of a blockchain as a decentralized network of the same data. Okay, so you have the same data distributed through lots of computers, and that makes it very fast, makes it very efficient, makes it also very safe for the most part. So that is a stark contrast to centralized applications. Let me give you an example again. When you see your money, your balance in your checking account, that is a centralized financial feature, because your bank somewhere has a big computer that tells everyone this is exactly what Shenka has in his account. However, in decentralized finance and in blockchain technology, in crypto, that information is distributed across a large network of computers, which is, of course, much more powerful if you think about it. And then, of course, this is very, very important as well. And one of the positive aspects of DeFi is that there is an open ecosystem. Anyone who wants to partake in this particular financial transaction or financial application can do so. To this day, currently, very often, in 99% of the cases, without you even revealing your name, without you even having a proper login to the financial application. All you need very often is a so-called self-custody wallet, often known as MetaMask or Rabby. And then that self-custody wallet lets you connect to the website that is the access to the DeFi application. And then you can do very, very cool things, such as, for example, if you have a lot of cash and you want it to work, you can upload it to platforms where you actually can have other people borrow your cash, and then you get yield for that, which is something that you couldn't easily do in the traditional financial system. You could certainly not do it without going through a middleman who would take a big part of the proceeds, right? So decentralized finance is accessible to everyone, whether you are a wealthy individual in a Western country or in a developing country, or maybe you are a person of humble means. There's absolutely no problem with that. You also have access to these DeFi apps in developing countries, which is very important, by the way, because I actually, when I travel, and I do travel quite a bit, whenever I go to countries that would qualify as developing, I find that those citizens are way more excited about crypto and DeFi as we are here in the US or in Europe, right? Because they see the true value of what this technology can give them. So that's very important to understand as well. By the way, don't forget, put your comments in the chat if you have any questions. Also, I have my landing page blended in here, crypto.lifestyle. This is a free 4-part video series that shows you exactly how I cash flow in crypto, in case you're interested to learn about that. So this is the most important part, really, of today's presentation. And I call this section the risk pyramid. It's very important for you to understand that when you get exposed to a DeFi project, really what is at the forefront of your mind typically is the enormous yield you can get. And it is not uncommon to have yield between 30% and up to 1,000% APR of your principal, right? What I have found is that the DeFi apps that you can take seriously typically range between 30% and about 200% APR, depending on what the DeFi app is doing. Anything above that is either highly volatile or it is not sustainable. Sometimes even it is a so-called Ponzi scheme. A Ponzi scheme being an application that only pays you out extremely high yield because there's continuously new investors that come in. The problem with a Ponzi scheme is that the application doesn't really create value that is real, and that's why that's a Ponzi scheme. Okay, I'll probably talk more about that a little bit later, because to me it is a crucial point in assessing whether a DeFi project is worth approaching or not. So the first layer of the risk pyramid is really the human risk, because you will find that there's very ambitious individuals from different walks of life that see this technology, the blockchain technology, and that come up with ideas that are financially interesting, right? And that could go anywhere from creating a borrowing and lending platform to creating an online bank to letting people invest in so-called liquidity pools, which is essentially a way for you to contribute to markets and then you get fees. So there's a wide range of options, but because it is an unregulated space and because it is open to just about anyone who wants to participate, you really have to take a good look at who is leading this, who is the founder, who is the founding father or the founding mother behind this project. That matters a lot, because when and if something goes wrong, which in DeFi projects, you should actually expect things to go wrong because we are still pioneering it, and there's really a lot that can go wrong, as in any business. And a DeFi project is typically just a business on the blockchain. So when things go wrong, you need to have people at the helm who want to always do the right thing. So the ethics and the moral code of the person or the group of people behind the project matters a lot, a lot, a lot, a lot. Yes, Andrea. Higher APR is higher risk, as always in life, right? What you will find, it's kind of very common in this space to not show your face. Everything goes with avatars and with nicknames. And sometimes you will find people who dox themselves. We say doxing in this space, meaning you reveal your true identity. And whenever I see a project where at least part of the individuals that are a part of the leadership team are doxed, that immediately increases the credibility of the project to me. It doesn't mean that it is 100% safe, but it is a very, very, very good indicator. So Lamsa, who is also a knowledgeable person in this space, says the fear of missing out can get you wrecked if you are not careful. That is absolutely true. DeFi often uses the strategy of creating a sense of fear for you, fear of missing out, where you just feel like you have to jump in headfirst into the project. If I don't join today, I don't get the bonus. If I don't put in more money, I will miss out on that juicy yield. But the thing is, and that's one of, I'm so happy you bring that up, Lancer, because that's one of the biggest mistakes I made in my journey through DeFi, is that I put all of my eggs in one basket. And that is a huge problem, because if something goes wrong, even if it's just a temporary halt of the application, you are a little bit in trouble. So it's very important to diversify the amount of money that you have allocated for DeFi, which should, by the way, be a small amount of your investable income. Very important to go into multiple projects and not put all of it in one basket. Yeah. So human risk. Let's see the next one. The next one is platform risk. What does that mean? Well, these DeFi projects often, well, actually always require a person or a group of people who know how to code the business logic of whatever the platform is supposed to do. And being a blockchain developer is certainly not a low-level skill set. And let this be told to you from someone who actually studied software engineering and who also studied web development. So I have no idea about blockchain development, but I do have a sense for coding. And I can tell you that coding, the people who code are of very different levels of skill sets are out there, right? And what you see in the front window is one thing, but what actually happens in the back end is a very different thing. There is this meme going around, it's quite an old meme, where it basically represents coding, and it has this, let me see, it has this like lake, and then you see above the lake and below the lake, underwater, and above you see this sexy mermaid, And then when you look under the water, you have like this huge monster tail, right? And a lot of coding projects are like that. They look very polished at the front, and then when you look at the back end, it's a huge mess. And that is the case more often than you would like to know. So the problem is with these DeFi apps is that us as coding lay people, we have no way of assessing whether it's done right or wrong. The problem is if it is not done well, then there can be calculation errors. And more importantly, way more importantly, it is very prone to being hacked. And that happens even to big projects, like, for example, the Cetus project, if you are familiar with that, was hacked recently, and it was a major decentralized exchange, right? So we never really know. So what do we need to do? Again, we have to rely on the humans that are behind the project, and or we have to rely on so-called audit firms that look at the code that was written and then give their seal of approval. The problem is that auditing the code is also a form of business. So to some degree, you can probably buy these seals of approval, but there are most certainly, it is a developing industry, and there are auditing companies that definitely their seal of approval means a lot, right? So you want to look at the project and ask, is your code audited by a third party? And that seems to be very, very important. Yeah, we are all learning in this space. This is a pioneering space. You are basically a person who goes on the frontier of decentralized finance, and that comes with all the opportunities and all the dangers. And then this is very, very true. Sometimes the best teacher is making mistakes, is true in every field of life. And the key here is to minimize the impact that the mistakes can have. And that again comes through education, which is what you're doing right now because you're watching the stream. And it also comes through diversification in investing. So then the next level here in our risk pyramid is the partner risk. That's a huge one, because essentially everything that I'm addressing in this risk pyramid gets amplified by the amount of partners that are in the project, right? Because now you have to think about two sets of humans, two sets of platforms, two sets of codes, right? But very often these DeFi projects do have partners. And in the example that I was showing you earlier, bringing up the gentleman here again, here in the top left corner, who was responsible for the marketing of this project, he had a partner who unfortunately was also responsible for managing the funds and also managing that backend, the code, right? And it turns out that the partner was not trustworthy enough to sustain the longevity of the problem. I can tell you that everyone mostly only knew this person here, the promoter of the project. And it was known that the partner was supposed to be an accredited financial company that was even checked by the central bank of the country where this project was hosted, but it was still not enough to not prevent this crash, right? So what I prefer is as little partnerships as possible in a project. I can tell you that. That is really a very important aspect as well, because it makes sense, right? You just double, triple, quadruple the amount of risk if you have partnerships. That is true in business as well, by the way, not only in DeFi. DeFi, again, I can only say it, DeFi is business on the blockchain. The last part here is that I have identified is market risk. These DeFi projects, they rely on the evolution of the crypto markets. The crypto markets rely on the evolution of the equities market, and the equity market rely on the evolution of macroeconomics, of just how the world goes, what President Trump tweets, what Elon tweets, whether they have a feud or not, and also whether countries decide to attack each other overnight or not. So there's a lot of elements that are not really within your control, which is why it's very important that you work on a system that is somewhat resilient to these very, very brutal fluctuations that can happen in this space. And I believe that I have devised such a system. At the very least, I can tell you that for about 2 years now, I'm cash flowing with that system, and it is entirely based on crypto and DeFi. And if you are curious how I do that, you are in luck, because I give it away for free in a 4-part video series. All you need to do to address your curiosity is go to the landing page crypto.lifestyle and then apply for your free course. Okay, so let's see if there are any comments. No, don't forget to, if you have any comments, questions, concerns, put them in the chat. It makes it a lot easier for me to have this live stream if there is interaction. I'm very grateful for your presence. Looks like we have about 13 people watching live, and that is very, very cool. So let's talk a little bit more about the aspect of human and market risk. So the human factors are team identity and reputation. So again, is the team known, and what kind of reputation do they have? In the world of DeFi, that usually can be researched by joining the Telegram channels. If in the world of crypto, a project doesn't have a Telegram channel, you almost cannot take it seriously, right? That's just almost etiquette in this space. A project comes with a Telegram channel, and in that Telegram channel, you have leaders, and the leaders are either doxxed or not, and the leaders have YouTube channels or not, or it's just they have been around for quite a while. They're known to be honest, they're known to be dishonest, all of that stuff, right? So you have to definitely look at the Telegram Telegram channel of the project. It also matters to me to identify, is this thing a full-time project for them? Is it their real business where they earn their bread and butter to put food on their table? Or is it just a side hustle for them, right? I mean, it goes without saying that if I know that someone is fully vested in their own project and they have real skin in the game, that makes the project way more trustworthy for me than if it's just kind of a side hustle. And by the way, my Crypto Alliance crypto lifestyle education platform is on 100% my focus. Is all I'm doing right now. So yeah, that's the human factor. So that's how you can do some research on that. Market volatility, you just have to be aware that there can be extreme price swings in crypto. Like, depending on what underlying coin is the investment vehicle of the project, it is not unheard of to have 60-70% drops within a day. There's often liquidity disruptions and flash crash scenarios. What that means is essentially that you are used to having an income from this project, and then all of a sudden that source runs dry, and it is sometimes the project's fault, but more often than not, it's not even the project's fault. It's just one of those layers that we looked at earlier, especially on the coding part and in the partnership part that ran into a problem. And then, of course, we have the aspect of regulatory landscape. So everybody has to decide for themselves if they are pro legislation or contra legislation. I, for myself, have a very libertarian approach to this, but that's really to each their own. I think, as so often in life, the truth is somewhere in the middle. By the way, good news. In the United States, there are definitely there's political willingness to exclude DeFi projects from a lot of the rules that would apply to big banking and so on and so forth. So that seems to be very important to let this industry be one that is wildly defying and wildly explorative finance, right? I love that about this space, because that is the only reason why quote unquote normal people get access to investment opportunities that would otherwise only be reserved for the elite, right? That is the truth. So platform risk, I addressed it already earlier. What is the code quality? Do we even have a way to assess that? Typically not, because none of us are coders at a level where we can even determine whether the code is good or not. So that is why those audits are important, right? So see here, that's the next point. Is there a third-party verification that reduces the risk? And also, are there multiple audits being done each time DeFi is coding, right? And you have no idea how often the code changes. That can be multiple times throughout the day, quite frankly. So are those major versions audited? And then this is very interesting. We start seeing the ability to purchase insurance to protect your investment, which is, of course, a very strong signal. We see that in this industry, and it is very welcome. I personally do liquidity provisions where I sometimes, depending on the time and the asset that I'm invested in, I purchase insurance coverage, which is really, really cool. So partner risk, generally speaking, more connections create more points of failure, right? So I actually prefer no more than 2 levels deep of partnerships, preferably none, right? I really want to know, is this project completely run in-house or not? And if you think about it, if I promote a project, I'm already a level myself, right? So I can never really fully guarantee risklessness if I am not the person coding, if I am not the person who truly understands what's going on in the backend. That's why everything comes back to relying on that human aspect, on having a good idea, a good sense for reading people, right? Integration complexity, security inheritance. Yeah, that's essentially what I was talking about. And it's the concept of a group of people is as strong as its weakest member, right? That's absolutely true. Also in DeFi, is there reliance on external protocol reliability? I mean, this was a big one that we all saw in this space. There's a very, very great project, in my opinion, out there that automates liquidity provisions for you. But liquidity provisions rely on decentralized exchanges where those marketplaces are hosted, where you can provide liquidity. And what happened to that project is that the marketplace got hacked. So there was absolutely no fault on the DeFi projects, but they were exposed to that dependency. And then cascading failures, problems can spread throughout the ecosystem very, very fast, especially also with FUD, what we call FUD, fear, uncertainty, and gosh, what is FUD again? FUD stands for, I always forget it. Fear, uncertainty, and doubt, right? If you spread that in the community. So again, do your research, research the team, research the people behind it. Yeah, technical assessment. I don't think you can do that on your own. You need to rely on those auditors. Definitely understand the protocols that are connected, the dependencies. Make sure that you operate on blockchains that are established, on elements in the tech stack that have high TVL, total value locked, right? Because that is essentially an indicator of how trustworthy the project is. And then this is a huge one, the business model analysis. Do you even understand why this DeFi project is making money? Do you understand that? Or do you just blindly believe that there is some kind of genius complex mechanism that generates crazy yield, and you put your money in at the top of the machine and get your yield out at the bottom of the machine? Is very, very tempting to believe these things. I speak from firsthand experience, and I urge you, make sure that in your mind it makes sense why this project is profitable. If you understand it, that's a good sign that you should invest in it. If you don't, or if it makes you feel like you need to have an advanced mathematical degree to understand it, then maybe stay away from it. That's kind of what I would say here. So key takeaways in this presentation is understanding each risk layer, do your own research, and very, very important, balance risk and reward, meaning have a clear understanding of what amounts of your investable assets should be in crypto in the first place, and then also what amounts can go in high risk DeFi plays. Again, I am someone who lives his talk. I live the crypto lifestyle 100%. I have majority of my net worth on the blockchain. So I'm giving you the opportunity to learn from someone who's actually walking the talk. And what I want you to start with is my free 4-part series that I call the Crypto Cashflow series. You can get access very simply by going to crypto.lifestyle, and then you are all set and ready to go. Let's see. Are there any questions? Please put them in the chat, or at the very least, if you learned something, if you said, well, this was really interesting, also put it in the chat. I need to know. So we're coming to, we're basically shifting gears just a little bit. There's 2 more things that I will address in today's stream. We will look briefly at Bitcoin, because that is the father of all crypto, and we're always interested, can Bitcoin go higher or not? So we'll just briefly look at the charts there. And then I have a very special treat for you, and that is basically a mindset song that my partner in business and life, Andrea, composed last week and also produced last week. And the reason why this is so important, mindset, is because as I go this journey through crypto and decentralized finance, I find that the biggest danger, the biggest obstacles in wealth creation, in financial management, and in navigating crypto and DeFi is to what degree do you own your emotions? To what degree do you know to manage your fear and your greed? And at the end of the day, fear and greed is always responsible for your success or your lack thereof. Okay, so let's look at the Bitcoin chart. Is looking very bullish at the moment. This is the 4-hour time frame, which I use to identify these levels here. I'm a student of Farouk, who is part of Crypto Banter, by the way, and he has taught me that you want to look at the 4-hour chart to identify these levels where you can expect a reaction from the price of Bitcoin. So that said, you saw that over the weekend we had this weekend range going on here, and now we have Bitcoin's price shooting up. Now, when it reaches this level, or potentially this level here, we are to expect a reaction, right? And it's usually always either you claim a level and you continue your journey. So if I were to show you a bullish scenario, price would come here, probably bounce down, and then it would kind of spend some time here and go up. That would be the bullish scenario. And the bearish scenario, it would be price reaches this level, gets rejected, tries again, and then fails, and then goes lower. How low that remains to be seen, right? So, but right now, we have to ask ourselves, well, how can we have, first of all, most of you here should look at the daily time frame, really, maybe even the weekly one, because that is for long-term investors, right? What I just showed you is for daily scalp trading. I don't think a lot of you would be in a position to do that. But what you want to kind of look at is the weekly chart, for example. Are we at a point where we have a local top and from here on out it keeps going down, or does it go higher, right? A lot of people look at the USDT dominance, how many stable coins are in the game, and are the stable coins the dominance, which means the ratio of the stable coins in the market, is it going up or down? So if it goes up, if more people go into stable coins, that is bad for crypto, or at least for those who want the prices to go up. If it goes down, that is good for crypto. So what you can see here is like this very huge range where we went up here. Actually, I should do this. This needs to be in red because remember, stable coin dominance is that price. So went up here, and here we're on the path down. And what we really want to capitalize on is we want the USDT dominance to break down to even the 3.8-ish level, right? That would probably mean that all the juice is out for this bull run. So I think there is definitely a good chance that we will come down here. I mean, again, simply knowing that most of the time crypto is ranging. And if we would apply that to the USDT dominance chart, we had bottom here, top here, and hopefully we go back to the bottom. Again, I don't know. I don't have a crystal ball. I take it day by day, and that is what I care about, right? Lamsa says, thank you for doing this video. You're very, very welcome. Okay, let's move on to the very, very fun part of today's presentation, and that is I'll play you Andrea's video that I said she produced, and then we will also basically end our stream after that. Unless I see something very relevant in the chat, I will, of course, engage in that. But so let me see. Here is what we're going to look at together now. Make this large, full screen, and then we can enjoy Andrea's music. Thank you for having spent your time with me, and be sure to be back for more great content.
Oh, yeah, 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 yeah. Hey. I always land on my feet. I always land on my feet. I land. Not because I never fall, I land. But because falling isn't final, I land. I always land on my feet, I land. Even when the market drops, I land. Even when my plan fails, I land. Even when I lose more than I thought I could hold, I land. My nervous system remembers how to recover, I land. My mind remembers how to recalibrate, I land. My body remembers how to stand again, I land. Not because I'm lucky, but I land. You know this isn't about surviving. It's about reestablishing self after collapse. My nervous system remembers how to recover. My mind remembers how to recalibrate. My body remembers how to stand again. I land not because I'm lucky, because I'm trained, because I've built this core on something deeper than results. I land. Other people may spiral. Other people may search for who they were before the crash, but I don't rewind. I rebuild. I land. I carry the memory of loss, but I don't carry the identity of it. I'm not afraid to fall because my foundation doesn't live in the outcome. It lives in me. I land. I land. I land. I always land on my feet.
Beautiful. Was that not great? I'm so lucky to be with such a talented woman, again, partner in business and life. And the principles that were shared in this video are more important in your journey of wealth building than you would ever know. So if you are interested also in getting access to that kind of content daily, there is a Telegram channel that you can join. You just need to go to, I'm blending in this address here, mycryptoalliance.com/resources. Okay, mycryptoalliance.com/resources. There's also a link. You go to the main page, and then you can sign up for Andrea's content. All right. There are no further questions. Thank you so much for your time. Again, don't be afraid of DeFi. It is a great, great, powerful tool. Educate yourselves. Join my list. Definitely take the free course that I have for you. I'm blending it in one more time here. Crypto.lifestyle is the landing page. And I'm sure I'll see you virtually or in real life. This is it for now. Bye bye. Stay safe.